Hello and welcome. Let us continue our learning on candlestick patterns for beginners. Now, this here is a market. This is a seller. This is a seller. This is a seller. And this here is also seller. This is a buyer. This is a buyer. This may be a buyer. Okay. And so on. Now, this seller has many vegetables that he wants to sell. In the same way, this seller has many vegetables that he wants to sell. Same is the case of this seller. This buyer can buy any vegetables that she wants from any of the sellers. She can buy the cucumber from this person. She can buy onion from this person. She can buy tomatoes from this person. In the same way, this person also can buy any vegetables from any of the sellers. And this buyer can buy any quantity of vegetables from this seller, meaning she can purchase 5 kg of carrots, 2 kg of lady's finger, 10 kg of brinjal, and so on. Okay, so as many as she wants, she can buy from the seller. All right. Now, same thing happens in the stock market too. There will be buyers and there will be sellers. Sellers may be having stocks of various companies. Buyers may be wanting to buy stocks of various companies. So, buyers can buy from any of the sellers and the sellers can sell to any of the buyers and in whatever quantity they would like. Okay, the thing is, here in this market, the buyer comes to know from which seller she is buying vegetables from. Meaning, if this lady wants to buy cucumber, then she will come to know that she is buying from this person. In the same way, if this person sells this brinjal to this person, then he will know to whom he is selling it to. But in stock market, that doesn't happen. In stock market, we have we have buyers, we have sellers. But the identity of buyers and sellers will remain unknown. So the buyers will not be knowing from whom they are buying the stocks from, and the sellers will not come to know to whom they are selling the stocks to. Okay? All that happens is a transaction between buyers and sellers. And using candlesticks, we will come to know what is the psychology of buyers and sellers. Okay? Now, stock market is like a tug of war between buyers and sellers. The green colored ones are the buyers, and assume this as red color. The red colors are the sellers. And in technical terms, we call buyers as bulls and sellers as bears. Okay? Bulls meaning buyers, bears meaning sellers. And using candlesticks, we will come to know who is stronger at this moment and who was stronger in the past. For example, if you look at this candle, you'll come to know that the bears were stronger here. If you look at this, you'll come to know that both bulls and bears were stronger, but bulls had a little bit of strength or showed little bit of strength here. Here the bulls were stronger. Here the bears were stronger. Here bulls and here bulls. So we need to learn the candlesticks to understand who was stronger in the past and who may be stronger in the future. Okay? Now, we have different market sentiments. We have neutral, we have bullish, bearish, and sideways too. Okay? Bullish meaning uptrend, bearish meaning downtrend. Now, what is uptrend? What is downtrend? If you feel that the price of a stock is going to go up or has gone up, then it is considered to be bullish. If you had bought a stock here and you hoped the market would go up, then your view was bullish. And when you bought the stocks hoping that the price would go up, then technically we would say you had gone long, okay, or you had taken a long position. We do not say we had bought stocks. We say we had gone long. Both are same, okay? You can use as per your convenience. It doesn't really matter. But here what is happening is you are hoping that the market would go up. And in the same way, if you had sold stocks hoping that the price would come down from here, then you would be having a bearish view. And if you had sold stocks here hoping that the price would go down, then we would say that you had gone short. Okay, you had gone short. So you go long here and you go short here. All right? Yes. Now, this is enough for now. Let us proceed to the next topic, which is support and resistance. All right? Support and resistance in itself is a very big topic, and probably in the future I'll do a video about it. But now I'll explain what a support is and what a resistance is in brief. Okay? All right. This is daily chart of Larsen and Toubro, and current price is this. Okay? Now, if you look at the chart, you can see that the price moved up and came a little bit down, moved up, came down, moved up, came down, moved up, down, up, down, up, down, up, down, up, down, and now it is up. Okay. Now, support is the area where the price comes to but fails to go down further. Okay. Now let me explain you what it is in detail. You see, if you see here, the price came down till here, but after this level, it failed to go down still more. Correct? After this level, what happened? The price went up. So this would be considered as support. Okay, so let me draw a line here. Support. So this line is the support. So the price came till here and failed to continue moving down, and it reversed its direction and moved up. So this is support. Okay. Now let me come here. The price moved till here, came down till here, But then after this level, it failed to continue moving down and so reversed the direction and moved up. So this level would also be considered as support. Okay. In the same way, we have resistance, which is just the opposite of support. Okay. If you see this, the price kept on moving up, but after this level, it did not continue its journey up. But what happened? The price reversed the direction and it started moving down. So this level would be considered as resistance. The level above which the price failed to move would be considered as resistance. Okay, so if you see here, we come down, we move up, or the price came down, the price moved up, and once again at almost this level it failed to continue moving up. It reversed the direction and came down. Okay, now it came down here, correct? After this level, it stopped moving down. It reversed the direction and once again started its journey back up. So this would be considered as a support. Okay, this would be considered as a support. So support is the level below which the price fails to move. Resistance is the level above which the price fails to move. Okay. Now, to give you an analogy, let consider a situation wherein you are standing inside your house. Okay, and you are standing with the ball in your hand. If you throw the ball up, till what level will it move? It would move till the ceiling of your house, correct? So ceiling would be considered as resistance. After hitting the ceiling, what would happen? The ball would fall down. And till what level would it fall down? It would fall till it reaches the floor of your house, below which it cannot move. So floor of your house would be considered as support. Okay. So this is support and resistance in simple terms. Alright. And for us to continue our journey, this is enough. Now the question comes, why do we need to know where the support is and where the resistance is? It is to make informed decision before taking trades. For example, if you want to buy the stock of this company, and if it is currently trading here, would it be wise to buy the stock here, or would it be wise to wait till the stock moves here, or would it be wise if you had bought it here? Okay, you had bought it here. If you know where the support of a stock is, then you can watch out for patterns. And if you have a pattern which matches all the conditions that we will be learning later, then you can enter a stock. Then wait for a pattern to happen at the resistance and sell the stock there. Okay, to know where to take the stocks or where to buy the stocks and where to sell the stocks, you will have to know where the support is and where the resistance is. Alright. So when you are trading, you need to remember these things. First, there will be a trend. In this case, it is a downtrend. The price is coming down from here to here. And then a pattern will form, okay, a candlestick pattern will form. We will learn about the patterns later in this course, and the pattern denotes or says that the prior trend or the previous trend is ending, meaning the trend can either go up, meaning it can reverse, or the trend can go sideways. Okay, the chances of both are there. So when a candlestick pattern appears, it doesn't mean that the trend will get reversed. All right, it just means that the prior trend is going to end. All right, and what we are looking for here are bullish reversal patterns. The prior trend is bearish. We look for bullish reversal patterns, and these patterns tell us if the trend will go up or sideways. Okay, and this pattern must appear at a key level, at a support level, or at a round number. Okay, we will learn about it later. So we learned about support and resistance, correct? So we have to look for the candlestick pattern at a support level. Okay, now coming to the bearish reversal patterns. First, there will be an uptrend, price is moving up, and then a candlestick pattern will form. This pattern tells us that the prior trend is ending and the price may reverse, or it may go in the sideways. Okay, remember that just because a pattern has appeared, it doesn't mean that the trend will reverse. It can also mean that the trend may go in sideways, and we will not be able to make out whether it will go down or go in sideways. Okay, all we can do is take a trade and hope that it reverses. Okay, and this pattern must appear at a key level, in this case at a resistance or a round number. Okay, only when patterns appear at key levels, they have some value. All right, because a pattern may appear here or here or here too, but only when it appears at a key level, it is powerful. Okay, next, if we go to Google and search candlestick patterns, we will get a lot of images of numerous candlestick patterns. Okay, there are a lot of patterns, but you don't have to learn all the patterns because it becomes impossible to remember them and apply in the real market. You need to learn few basic ones, the ones that appear time and time again. Okay, and that is what we will learn in this video series. Remember that there are different types of candlestick patterns. We have one candlestick pattern, meaning one single candlestick will tell us if the trend will change or not. We have two candlestick patterns where we look at two candlesticks, consecutive candlesticks, to predict the change in trend. And we have three candlestick patterns where we look at three candlesticks and take a trade. Okay, one candlestick pattern, two candlestick pattern, and three candlestick patterns. All right.